Oh, this is a really important one, I think, because what I'm trying to do here is show people the argument. My argument why the Australian stock market has been really awful, or very average, is because all the money's gone into property. So if you think in really simple terms, like an idiot like me does, there's two ways to get money into an economy. You have to have the private sector borrow, and that means either business will borrow or the general public will borrow. Now, the business will borrow to expand, which is what you want, okay? But what we've had is we've had 25 years in property, and that's been the consumers or the general public borrowing to buy mortgages to speculate. And the mortgage debt, buying existing properties, is unproductive. So in other words, it sounds great, but it doesn't add anything to GDP. So my argument is the reason why the stock market hasn't done well is because people have been borrowing for property. I know there's economists out there going, the government's spending all this money. Well, that's bullshit. The debt to GDP is like minuscule. Mm-hmm. And what people don't understand is when the government runs a surplus, that means they're taking money from us.
Yeah.
When they're spending money, they're giving it to us. So I want them to give it to me, right? Which is go into a deficit.
In a good way, not a bad way
In a good way, yeah. So, but that's what I mean. The problem, and this chart is showing that. I think it's, what did my poor eye say, about 2000, which is what we talked about in the Property Problems special podcast.
Yeah.
Right? 2000, everything goes gangbusters in property all over the world. Canada, America, England, and that's because that flood of debt money has gone into property, not the stock market.